China's price wars and excess capacity. And we see on the anti-involution drive that they have discussed, we see some strong intent to work on that. So China is now looking into these pricing law amendments, more oversight on that, and also barring companies from selling below cost to drive out competitors. How effective do you think these measures will be, focused on the supply side?
So I think it's pretty encouraging that they're now taking this issue a bit more seriously. For much of the past year, they've sort of been largely denying that this is a major problem. So from that perspective, I think it is encouraging. Some of the supply side measures that they're talking about, particularly sort of reducing the degree of local government support for companies and also allowing sort of loss-making companies to exit the market, that's exactly what we need to see happen. I think the challenge, though, is actually implementing those measures in practice, because doing so is going to be pretty painful. Although over the medium term it helps to reduce the degree of overcapacity, in the short term it means job losses, it means a decline in aggregate demand from weaker investment growth. And so to sort of allow local governments to be able to absorb that economic cost, I think the central leadership needs to provide some breathing room for them in the form of increased demand-side stimulus as well. So I think it's going to be challenging to do it through purely these kind of supply-side measures in isolation. I think you need the demand-side stimulus sort of helping to offset some of the negative economic costs from those supply-side measures. And that's where we're sort of still, that's the part of the puzzle that seems to be missing at this stage, where they're proposing these supply-side measures, but we haven't seen much on the demand side yet.
Okay, let's drill down into the details. What would a meaningful anti-evolution policy look like?
So, a few areas. First, they're talking about price regulations, right? So, preventing companies from selling below cost. I think that's going to be probably not that effective, because companies are selling below cost for a genuine reason, right? Everybody knows that the current situation is not sustainable, that there can't be hundreds of auto manufacturers in China in the long run, for example. But everybody wants to be one of the survivors. So the way that you sort of make sure you're one of the survivors is you defend your market share by selling below cost in the short run. So companies have an incentive to engage in that behavior. And I think it's quite hard for the government to actually prevent that simply through regulating prices. And we saw this during the supply-side reform agenda back in 2015, where the government put capacity reduction targets in place for the steel sector. And basically many firms found ways to game those targets. And I think the same could happen this time in terms of those price controls. I think more effective is to focus on market exit. So allowing companies that are basically not performing well and not really competitive to exit the market. But as I said, that means accepting job losses locally. And I think the government, central authorities need to come in with some fiscal support to offset the costs of those job losses, maybe through retraining schemes to help those workers shift into different sectors. So that's, those are the kind of policies that we're looking for in practice.
How far away is China from rebalancing its economy if it gets its anti-evolution policy right?
So I think it's going to be a drawn-out process, because at this point, China's still investing more than 40% of its GDP, which is far higher than the global average. What we've seen so far is that the share of the amount of spending on social policy, on consumption, is increasing, but it's not increasing fast enough. Investment is still increasing more quickly. So we haven't even reached the stage yet where they've started to really rebalance. We're getting closer to that tipping point, but I think it's going to be a gradual process. It's very hard for China to overnight to change its model. But I do think it will be more healthy for the Chinese economy in the long run. So even if you have growth slightly slower than it is today, 3-4% instead of 5%, if more of that growth is coming from consumption, then households will probably feel that growth a bit more. I mean, one of the most common things I hear when I go to China is that the economy doesn't feel like it's growing at 5% for most households. And it's the same for the equity market. If you look at the composition of the equity market, it's much more sensitive to the consumer story than it is to the manufacturing investment story. So if you shift growth in those directions, you're actually going to get a much better outcome in terms of households and also the equity market as well.